Okay, let's unpack this. Welcome to the Deep Dive, your shortcut to being truly well-informed. Today, we're diving deep into IREN Limited, trading on the NASDAQ ticker IREN. What if we told you there's a company right at the heart of both the Bitcoin boom and the AI revolution? A company analysts are, well, overwhelmingly bullish on, yet a big chunk of the market is betting against it. Today, you're with us as we explore IREN. It's a true battleground stock, high risk, high reward. You really need to understand this one.
That's exactly right. IREN, basically, they're a digital infrastructure company. They provide the high-performance computing power needed for digital assets, think Bitcoin, but also increasingly for artificial intelligence. Our deep dive today, based on a pretty comprehensive fundamental analysis, all the financial data, market stuff, is current as of August 24, 2025. Oh, and just for context, IREN closed at $21.43 a share back on August 22nd, 2025.
Right. And our mission here, as always, is to cut through all the noise, pull out the really important nuggets of knowledge from these sources, and hopefully give you those aha moments, where the complex stuff just clicks. So let's get right into it. Let's uncover the story of IREN. Now, to really get a handle on where IREN stands, we need to build that foundational picture first. So we'll explore their core business, figure out who's leading the charge, and then, dig into those crucial financial numbers.
Okay, let's start with Chapter 1, the IREN Engine, a business built for the digital future.
To really grasp IREN, you've got to see how they've evolved. They didn't just start here. They began mainly as a Bitcoin miner, right? But they've pretty shrewdly shifted, becoming more of a diversified digital infrastructure player. Think of it like a two-pronged approach. Both sides focused on high-performance computing, and crucially, it's all built on data centers running on 100% renewable energy. That's a big part of their story. So one side is Bitcoin mining. That brought in, about $184.1 million in revenue in fiscal 24. Solid. But here's where it gets really interesting, the real aha moment in IREN's numbers, their AI cloud services. It started small, just $3.1 million in FY24 revenue. Tiny, right? But it's already exploded. We're talking an annualized run rate of $28 million as of May 31st, 2025. That's almost a 900% jump. It signals this massive, super fast pivot into a really lucrative new area. It's almost like a startup just booming inside the main company. And they're using specialized kit for this high-end NVIDIA GPUs.
Yeah, and the scale they operate at is, well, immense. IREN isn't just dabbling here. They're a leader in Bitcoin mining now. They hit their target 50 exahash per second of installed capacity by June 2025. And just so you understand, an exahash is a quintillion calculations per second, a 1 with 18 zeros, so 50 EHs. That's a huge amount of computing power just for Bitcoin. Puts them right up there with the big players.
Wow. And their data centers.
Equally massive. Their portfolio is huge. 810 megawatts already running, another 2,100 megawatts under construction.
Yeah.
And they've got plans for over 1,000 more megawatts in development. And these aren't just anywhere. They're strategically located. British Columbia, Canada, 3 sites there, about 160 milliW total. And then the really big ones in Texas. 750 milliW operational at a place called Childress. And a massive 2,000 milliW campus being built right now in Sweetwater, Texas.
Okay, so what's the core idea, their main selling point?
It really boils down to this. Vertically integrated, high-performance digital infrastructure powered by low-cost, 100% renewable energy. That's the heart of it.
Right, so they control the whole chain using clean power. Makes sense.
Exactly. And what's fascinating is how they're playing in two very different but related industries. You've got Bitcoin mining, which after the 2024 halving is more mature now. It's all about efficiency, low power costs. And its fortunes are still, heavily tied to Bitcoin's price. People are throwing around forecasts like $250,000 by the end of 2025, but who knows? Then you have the AI and data center world. That's just pure explosive growth. We're talking maybe $344 billion in 2024, jumping to $452 billion in 2025. Just massive numbers.
So that AI pivot looks pretty smart then.
Absolutely. It's not just diversification. It's a really sophisticated hedge, right? Against Bitcoin's ups and downs. They use the same core assets, the energy, the buildings, but tap into totally different economic forces. Competitors. Well, in Bitcoin mining, you've got the usual suspects. Riot, Marathon, CleanSpark. In AI infrastructure, someone like CoreWeave is a key name to watch.
And regulation, that must be a factor.
Oh, definitely. It's critical. In British Columbia, they've got cheap hydropower, but there's that 18-month pause on new crypto connections, ending late 2025. Texas, though, where they're investing heavily, generally crypto-friendly. But there is a new rule, starting Feb 1, 2025, requiring big facilities like theirs to register with the State Utility Commission. So having operations in both places, it seems like a deliberate strategy, almost like regulatory arbitrage, you could call it.
Interesting. And getting into this business easy, I imagine.
Not at all. The barriers to entry are huge. You need massive amounts of capital up front. Finding and securing long-term, cheap power, that's incredibly difficult. And you need deep technical know-how, energy management, advanced cooling. It's complex stuff.
Okay, building on that, what really makes IREN stand out? Why is Wall Street apparently so interested? What are their advantages?
Right, here's where it gets really interesting. They've built some solid advantages. First, their brand. That commitment to 100% renewable energy is a big differentiator. Helps with their image in an industry often criticized for its energy use. Then, cost advantages. Picking locations with lots of cheap, often underused renewable power gives them a crucial edge on their biggest input cost electricity. And finally, their unique assets. That portfolio of land, the secured multi-gigawatt power connections, especially in Texas, that's hard to copy. It creates a real moat around their operations.
That makes sense. Okay, let's shift gears a bit. Let's talk leadership.
Good idea. Let's move to Chapter 2, at the helm, evaluating IREN's leadership and strategy.
Leadership is always crucial, right? Especially in a fast-moving, volatile space like this. IREN's led by co-founders Daniel and Will Roberts, brothers actually, co-CEOs. And their background isn't typical Silicon Valley tech. They come from traditional infrastructure finance, managing big, capital-heavy assets. And that experience, it was really put to the test back in the big crypto crash of 2022.
Yeah, that was a make or break moment. What they did was pretty bold. They had over $100 million in equipment loans, right? Held in these things called non-recourse special purpose vehicles, or SPVs, basically separate legal shells. They strategically defaulted on those loans. Because they were non-recourse, the lenders couldn't go after the main company. It protected the core business. And by the end of 2022, IREN was essentially debt-free.
Debt-free, wow. That takes some serious financial skill, especially during a crisis like that.
Exactly. It really showed a level of financial acumen you don't always see. Now, they do communicate pretty transparently with monthly updates and things.
Yeah.
But it's also worth noting, just for balance, that the company was named in a securities class action lawsuit back in December 2022, something investors should be aware of.
Okay, so how are they using their capital now? What's the strategy?
It's pretty clear. Aggressive reinvestment in organic growth. That's the name of the game. They're funneling almost all available cash back into building out their data centers, especially that giant Sweetwater site in Texas, and buying the latest hardware. Next-gen Bitcoin miners, those NVIDIA GPUs for the AI cloud business, you won't see them doing big acquisitions or paying dividends or buying back stock right now. It's all about reinvesting for growth.
But that must impact profitability, right? All that spending.
It does in the short term. Their return on invested capital, ROIC, was negative from FY22 to FY24. It was negative 2.42% in FY24, for instance. But look, that's kind of typical for a company in a massive building phase like this. They're intentionally sacrificing today's profits, pouring every dollar into assets they believe will generate much bigger returns later. The big question, the billion-dollar question really, is whether those future returns will materialize and drive that ROIC positive down the line.
Okay, let's get into those numbers more deeply then. Time for Chapter 3, By the Numbers. A deep dive into financial health. Let's hit the key metrics. As of our analysis date, their market cap was around $5.18 billion. Revenue trends show, well, hypergrowth. Revenue more than doubled in fiscal 24, hitting $187.1 million. And net losses, they're narrowing. That huge $419.7 million loss in FY22, a lot of that was a crypto crash. By FY24, the loss was down to $28.9 million. That reflects better market conditions, but also them scaling up operations.
And the profit margins tell an interesting story, too. Gross margins have been consistently high, like 56.4% in FY24 if you just look at direct energy costs. Shows the core mining can be profitable.
But operating and net margins, deeply negative. That's largely because of huge non-cash charges like depreciation on all those buildings and machines, plus just the cost of scaling up a big global business so fast.
And free cash flow. You mentioned reinvestment.
Yeah.
Yeah, consistently negative and getting more so. It was negative $629.4 million in FY 2024, which sounds alarming, maybe. But again, it's a direct, intentional result of that aggressive investment strategy. That cash burn is the fuel for future growth as they see it.
But how stable are they financially burning through that much cash?
That's where the balance sheet story comes in. It's been transformed. After surviving 2022, management clearly decided to build a financial fortress. The FY24 cash flow statement shows they raised over $783 million. Not from debt, but from issuing new shares.
Equity.
That huge cash injection dramatically boosted their reserves, strengthened their equity base, and improved liquidity massively. You see it in the ratios. Debt to equity dropped from 0.09 down to just 0.05, tiny. And the current ratio, a measure of short-term liquidity, jumped from 3.72 to a really robust 8.87. So they have this fortress balance sheet now, a big cushion to handle volatility and fund growth without needing risky debt.
Okay, a fortress balance sheet sounds great, but $783 million from share issuances? That means significant shareholder dilution, right? How do they balance
Yeah.
that?
It's absolutely a trade-off, a critical one for any growth company. Their strategy is clearly prioritizing funding this massive expansion with equity, not debt, especially after learning the lessons of 2022. Yes, dilution impacts current shareholders now, but management's bet, their whole thesis, is that the value created by this huge expansion into AI and Bitcoin will ultimately be way bigger than the dilution effect. They're aiming for a much larger pie overall, even if individual slices are initially smaller percentage-wise. It's a classic high-growth gamble.
Makes sense. So what about valuation? How does it look?
Well, since they aren't profitable on a trailing basis, the standard PE isn't useful. We look forward. Their forward price-to-earnings ratio is about 16.95. How does that compare? Riot Platforms is much higher, around 48. Marathon is lower at 13.6, CleanSpark around 10.6. So IREN's kind of in the middle of the pack there. But for intrinsic value, trying to figure out what it should be worth based on future potential, we use a discounted cash flow, or DCF, model. That model estimates IREN's intrinsic value at roughly $24.31 per share. Compared to the current price, around $21.43, that suggests it could be undervalued, assuming the model's forecasts about future growth play out.
Okay, interesting. Potential undervaluation there.
Potentially, yes. Now that we've covered the business, management, and financials, let's pivot. Let's look at how the market sees IREN, who owns it, and the big risks involved.
All right, moving into part 2 of our deep dive. Let's start with chapter 4, Wall Street's verdict. Analyzing market sentiment. Market perception first. Wall Street analysts, they seem overwhelmingly positive on IREN. The consensus rating from, 12 or 13 firms is a strong buy. That's pretty clear. Price targets, the average 12-month target is somewhere between $21.50 and $22.18. But the full range is wider. You've got lows like JP Morgan at $16 and highs like Canaccord Genuity at $23. B. Riley's at $22. And the general news flow, media tone through 2025, mostly positive. Lots of talk about record revenues, hitting that 50 EH's target, the AI expansion, buying those NVIDIA Blackwell GPUs.
Yeah, but here's the fascinating part. The real tension. You have all these bullish analysts, right? But then you look at the short interest. It's high. As of late July 2025, about 26.86 million shares were sold short. That's somewhere between, say, 11.95% and 13.55% of the publicly traded shares. Anything over 10% short interest is generally considered significant. It means a decent chunk of the market is actively betting against the stock. That's what makes it a battleground stock, bulls versus bears. It also raises the possibility of a short squeeze if the price moves up sharply.
Okay, so strong bullish analyst consensus, but also high bearish bets from short sellers. What about the stock's actual movement? Technicals.
Technically, the trend looks strong. The stock price is trading well above its key moving averages. It's comfortably above the 50-day average, which was $19.53, and the 200-day average at $17.98. So technically speaking, that signals pretty robust positive momentum recently.
So we have this divergence. Bullish analysts, strong momentum, but high short interest. What's the bear case? What are the short sellers thinking?
That's the million-dollar question, isn't it? They're likely focused on a few key things. One, the inherent volatility of Bitcoin. Always a risk. Two, the massive spending, the CapEx, and the resulting cash burn needed for this expansion. It's huge. Three, the potential for more shareholder dilution, like we discussed, to fund that spending. 4, execution risk. Can they actually build out these massive projects on time and on budget? And 5, those new U.S. tariffs we'll get into more detail on. They likely see that as a major concrete headwind that could really hurt future returns. Essentially, it's a bet that either the growth plans will stumble or the market will eventually punish the company for its current lack of profitability or the Bitcoin tax.
Okay, that lays out the conflict well. Let's look at who actually owns the stock. Let's get into Chapter 5, the ownership table. Who holds the keys? Right, ownership tells you a lot. Who has confidence? For IREN, it's pretty concentrated. Institutions hold the biggest chunk, about 61.8%. The general public holds around 20.2%. And individual insiders, a significant 13.0%. That high institutional ownership. It suggests credibility with the big money managers.
Yeah, and the names are diverse. You see funds like BIT Capital, Jane Street, Citadel, Hansei Invest, even Fidelity. It shows pretty broad appeal across different types of institutions.
But here's where it gets really interesting again, right? That insider ownership.
Absolutely. That 13% insider ownership is exceptionally high. And it's mostly the founders. Co-CEOs Daniel and William Roberts each own about 6.2% of the company. That's nearly 15 million shares each. Combined, they're 12.4% stake. At the current market cap, it's worth over $640 million.
$640 million. Wow. That's not just a token holding, that's serious skin in the game.
Exactly. It creates this profound alignment of interest. Their personal fortunes are directly tied to IREN's long-term success. And look at their recent actions. Over the last 12 months, they haven't sold a single share on the open market. Zero sales. In fact, on July 1st, 2025, they each acquired over 1.79 million more shares through non-open market transactions, likely related to compensation or options. It's a powerful vote of confidence, isn't it? They're not just managers, they're owner-operators betting big on their own company's future.
That alignment is definitely compelling. Okay, but no investment is risk-free. Let's stress test this.
Right. We need a balanced view. Let's dig into the risks, the weaknesses, the threats. Time for Chapter 6, Navigating the Headwinds, a comprehensive risk assessment. We'll do a quick SWOT analysis. Strengths, weaknesses, opportunities, threats. Strengths we've covered. Low-cost renewable energy infrastructure, operational efficiency, experienced and superline management, that fortress balance sheet. Weaknesses, well, revenue is still heavily concentrated on Bitcoin. Risky, high cash burn from that aggressive expansion leading to negative free cash flow, and the shareholder dilution we talked about, shares outstanding grew almost 30% in the past year. That's significant.
Opportunities.
Huge potential in AI cloud growth, obviously. Continued Bitcoin adoption, if that happens, and maybe potential to expand geographically beyond North America eventually.
And the threats, the big external risks.
Okay, threats. Regulatory and geopolitical risks are real. That BC moratorium's an example. New Texas rules. Things can change fast. Competition is intense. Other big Bitcoin miners, established players in AI and HPC, and let's be blunt, Bitcoin price volatility. That remains the single biggest external threat, the elephant in the room.
But there's a more immediate, quantifiable threat you mentioned, the tariffs.
Yes. This raises a really important question about U.S. tariffs imposed in 2025. This is crucial. Mid-2025, the U.S. government slapped significant new tariffs on semiconductor hardware imports. We're talking 21.6% on stuff from Southeast Asia and a massive 57.6% on imports from China. This includes the ASICs for Bitcoin mining and the GPUs for AI. This is a direct hit to IREN's growth plans. The company itself has publicly flagged this. They estimate a potential tariff liability of up to $100 million. That directly increases the cost of building out their Texas sites, which are key to future growth. It's probably the biggest, most concrete, near-term negative factor they face right now.
Oof. $100 million potential hit. That's substantial, especially when you're already spending so much on expansion. Really highlights the complexity here. Okay, let's try to pull this all together. We're at Chapter 7. Conclusion. Weighing the bull and bear cases. So after digging through all this, let's synthesize the bull case for IREN. It seems to rest on four main pillars. First, it's a pure play on digital infrastructure. You get exposure to both Bitcoin and AI growth, two massive trends through one company. Second, they have world-class assets, big modern data centers, low-cost renewable power. That's a durable cost advantage. Third, proven and aligned management, those co-CEOs with infrastructure backgrounds and huge personal stakes. That's compelling. And fourth, that fortress balance sheet. Lots of cash, little debt, gives them resilience and firepower.
Right. But the bear case is also built on four significant risks. One, extreme volatility and commodity dependence. Their fate is still closely tied to Bitcoin's wild price swings. Two, geopolitical and regulatory headwinds. The BC moratorium, those U.S. tariffs, these are real, tangible drags. Three, execution risk, plus the high cash burn and dilution. Building these massive projects perfectly is hard, and it costs a lot, diluting existing shareholders. And four, that significant bearish sentiment. The high short interest shows a large part of the market thinks these risks are just too big.
And valuation-wise?
Well, as we said, our educational DCF model suggested an intrinsic value around $24.31 per share.
So putting it all together for you, the listener, as of August 22nd, 2025, IREN's price at $21.43 was trading a bit below that DCF estimate. Wall Street analysts are mostly bullish too, seeing potential upside. But clearly, IREN is a high-risk, high-reward proposition, no doubt about it. There's potential for huge value creation if they execute flawlessly, if the AI business scales like crazy, if Bitcoin behaves. But conversely, the risks are very real. Execution stumbles, a crypto winter, more trade wars. Any of those could seriously hurt the company. So the final thought for you. Given these fascinating conflicting signals, the bullish analysts and momentum versus the high short interest and those very real tariffs, how do you weigh these unprecedented growth opportunities in AI and Bitcoin against the significant immediate hurdles IronNets has to clear? That wraps up another deep dive. If you found this valuable, please like and subscribe to the Stock Analytics AI YouTube channel. Remember, members get priority deep dives on tickers for just $4.99 a month. And over the next few months, we're covering all of the S&P 500 stocks. Members get exclusive priority access to those. Want a one-off deep dive on a specific stock you're interested in? Just drop us a super thanks on the video.
And please, always remember, this analysis was generated by an AI system. It's for educational purposes only. It should absolutely not be considered financial advice. We strongly encourage you to do your own research, dig deeper, or consult with a qualified financial advisor before making any investment decisions.
Thanks for joining us on the deep dive. Until next time, keep digging.